Hello everybody, this is Toni Turner and welcome to the market now as of about 11 a.m. Eastern on Friday, September the 9th. U.S. stocks opened lower today amid investor caution following a nuclear test by North Korea and comments by a U.S. Federal Reserve official that supported an interest rate hike. North Korea conducted its fifth and biggest nuclear test on Friday and said it had mastered the ability to mount a warhead on a ballistic missile, drawing condemnation from the United States as well as China, Pyongyang's main ally. Futures extended losses after the Boston Fed President Eric Rosengren, an historically dovish policymaker, said the Federal Reserve increasingly faced risks if it waits too much longer, so a gradual policy tightening is likely appropriate. Although he did add that the Fed was unlikely to raise too rapidly. U.S. stocks have been subdued for 2 months, with the benchmark S&P 500 index failing to register a move of more than 1% on a closing basis, either up or down since July 8th. The index is roughly 1% away from its last record high, registered on August 15th. And as we know only too well by watching these charts, everything I just said is extremely accurate because the market has not seemed to move at all. Let's look at that. The S&P 500 spider symbol SPY, of course this is a daily chart of this ETF that closely follows our S&P 500 index. We have been watching it just trundle sideways here for at least half of July. Then for the other half it moved up. And as we've been talking about for the last 2 months and change, it has been just trading sideways, as the news just said, not moving more than 1% one way or the other. And I think I've seen this is a many year record for it to do such a thing. It did pop up back up again this past week. It fell a little bit last week, as we know, popped up again a little bit this week. And now when I captured this chart, the SPY was trading at $216 even. We know it came back up to $219 earlier this week. The all-time closing high here was on August 15th, and that was at $219.50. And back then we had said the logical support for very close term, near-term support for this particular consolidation was at about $217. That was broken this morning when the SPY gapped down at the open. And as you can see by this red candle for today, at least up until now has continued to fall. Now it's trading, at the moment it's trading just below its 50-day moving average, certainly below its 20-day moving average. So we're right on support here. The next level of logical support very nearby would be 215, if I could draw this line a little straighter. Once an index or a stock falls below its 50-day moving average, then we start getting certainly more cautious. Of course, the 200-day moving average is down here just a little bit over 205. We know that in the last few weeks we've been talking about the fact that we've had a bearish divergence on the RSI, excuse me, the 14-day RSI. While the market was trading, consolidating sideways, the RSI was actually moving lower in what we call a bearish divergence. So we noted this. It gave us some warning to be careful. As well, I told you that the MACD line, the black line, had fallen below its red signal line. That too was also a bearish divergence and a warning that some weakness that maybe we couldn't see with the naked eye was coming into the S&P 500. Now, if, as some expect, the SPY does make a 5% pullback here, that would take it down to about 208, which would be about on this price support level, if I could again draw a straight line, about where this price support level is here from back in June. So 208 would be a 5% pullback on the SPY, which some analysts are predicting. Now, of course, it would not go straight down. If that were to even happen, it would move in waves, as is normal. And it might not even go down that far, so I'm not saying that will happen, but some expect it. We've been in a bull market here since March of 2009, and I would not, it would be normal and natural even for the market to move down. And of course, we're now moving into earnings season. We're now moving into election season. That could cause a little more volatility. And certain recent, I think the interest rate hike would confuse the market here if it were to happen on September 21st when the Fed is talking about, that is their meeting on September 21st. Since we've had the last couple of weeks have shown us disappointing economic reports, I think the market would not be too happy with the Fed if the Fed were to raise interest rates at this time. So everything taken into consideration today is causing the SPY to fall lower. Our next chart is a chart of the PowerShares QQQ, symbol QQQ. As you all know, this ETF follows the NASDAQ 100 index. Tech stocks have been very, very strong this year, especially Amazon, especially Facebook, Intel, Microsoft. They've all done very, very well. And when we see weakness coming into these big generals or these big leaders, then we have to get a little more concerned. When I captured this chart today, the Qs were trading at $115.95. The Qs had gapped down to this level. 116 was support here, so that's what it's sitting on right now. As you can see, it's trading above its 50-day moving average, below its 20-day, and of course above its slightly rising 200-day moving average. Again, our support here is at 116. We're slightly below that now. The 50-day moving average is coming in here at about $114 and about 50 cents. Now, if the Qs think that rate hikes are going to come into being, they are not going to be very happy because most tech companies sell their goods and services overseas, and a rate hike will cause the price of their goods to be more expensive to these overseas buyers. So that a rate hike will definitely have an impact on the NASDAQ 100 and on tech companies and multinationals as well. So we'll keep an eye on this, see if it can stay above the 50-day moving average, if it can stay above the 114 line. That's important, and certainly important that it stays above the 200-day moving average coming in here at 109. Now let's go on to look at one ETF that's slightly up today. Some people think we could hide out in the banks here. I've seen a couple of patterns I don't like that much. So I'm moving back over to the S&P Spider Biotech ETF, the XBI. Top components of this are Sarepta, Ionis Pharmaceutical, Medivation, Biogen, BioMarin. We see a June 27th low here of $49.51 and a recent August high on August 24th up here, and it's about equal with the last high here. This August 24th high of $64.89. Our 50-day moving average is coming in here at $60.41. When I captured this chart of the XBI today, it was trading at $62.82. I know there's been a lot of talk lately about political figures talking about how drug companies will have to lower their prices and so forth. That's easier said than done, so we'll wait and see. I really believe healthcare and biotech is the wave of the future. It's trading above its rising 50-day moving average again. So if the XBI can stay above its 50-day moving average, which is coming in again at $60.41, I may look to be a buyer of this. I'd actually like to see it dip first. If the market continues lower in the coming week, the XBI could certainly go with it, could certainly go lower. The good thing about Biotechs, though, is that they go more on clinical trials than they do the overall moves of the market. So they kind of don't care as much about market moves as some of the other industry groups or sectors. So I'll keep an eye here on the XBI, I should say, and if it stays above this 50-day moving average, I'll see into next week how it acts, and it could potentially be something we get into in weeks to come. It could move passively back up over 63, up to 65, and potentially a little higher. Now we'll go on to next week's economic reports. But first, please join us this coming Monday online from 4:30 to 6 p.m. Eastern for our next session of Toni's Market Club. We'll talk about which side of the market to trade, have a mini trading lesson, and I'll give you stocks and ETFs that may become ripe for high potential trades. This is a low-priced, high-value opportunity to learn more about the market, become a smarter trader, and make more money. So please join us. For those who cannot attend our live session, no problem. The recording of our session is available to all of our members just a few minutes after the session ends. And now for the coming week's economic reports. Nothing much on Monday and Tuesday. Wednesday we have crude inventories. Thursday we have jobless claims, retail sales, the PPI, which is the Producer Price Index, Philly Fed, Empire Manufacturing, and natural gas inventories. On Friday, we have the CPI, or Consumer Price Index, and the Michigan Sentiment Index. Please remember to join us for Toni's Market Club this coming Monday. Don't miss out on this fantastic opportunity to raise your trading knowledge and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.